Hello, traders. It is Wednesday, May 20th, and we're 2.5 hours into trading. Market's pretty dang boring today. How can you say that? The market's up so much. We're making a new relative high. We're above the 100-day moving average. This should be go, go, go exciting. Not really. Let's take a look at the market action the last couple of days. We need to realize that we're going into a 3-day holiday that typically takes Friday out of the picture, and it also takes Tuesday out of the picture. So we're losing 3 trading days in essence, and you see the volumes contract and the ranges collapse intraday as we start heading into these holidays. They typically do have a bullish bias, and we're seeing that today. There's also been some decent news. There was concern yesterday that the trial results for Moderna's vaccine were not quite what everyone was expecting. And you can see how yesterday the market sold off initially on the open. Then it gradually started to recover, and we had this nice little steady upward sloping trend line. And we were starting to approach the high from Monday. Everything looked great. People were assuming that we're going to try and challenge that high from Monday, break through that relative high, close on the high of the day. So bulls got a little bit too aggressive here, and then wham, that news from Moderna's test came in, and we saw a heavy dose of selling with a close on the low of the day and a close well below resistance at SPY 295. That looked pretty concerning, especially with these long red candles closing on the low. How the heck can the market be so dang bullish 1 second and so dang bearish the next? Now, let's talk about the vaccine for a second. There are dozens and dozens of companies within the US looking for vaccines and treatments. Globally, it's hundreds of biotech companies trying to find a cure for the coronavirus. So even though the news might have been negative for Moderna, there are lots of good pending news items out there. Lots of drugs being developed. I personally believe that the bigger news that's happened this week is the fact that we've had states reopen fully, like Florida and Georgia, and that there has not been a resurgence in the coronavirus. That's important right here, right now, because businesses have to get on track right away. Workers have to feel safe when they return to their jobs, and they need to feel that their jobs are secure, because that's when consumer spending can start to take root, and that's what's going to propel this recovery. So vaccines, yes, very important on a 6 to 8 month time horizon, but there's plenty of time for that news to unfold. But right here, right now, the rubber meets the road. We need businesses to reopen. We need people back at work. We need people spending. That's what avoids any kind of a credit crisis. And that's the news that I think is fueling this market rally right now. Is we've got states reopening. They haven't had a resurgence in coronavirus. Now you see every other state starting to follow suit, and they're being very progressive with their reopening. A lot of people protesting. They want to get back to their normal lives. So the market is responding to that right now. And you can see how that sell-off that we had yesterday late in the day, boom, right out of the gate this morning, right back like it never even happened. So, when you get into light volume situations ahead of a holiday, you can expect these types of moves. And all it takes is one recycled news item to rattle investors, especially when you get a lot of bullish speculators lining up like they did right here. Oh, this is it. We're going higher. We're going higher. Oh, we're going to take out the high. Look, we're going to go. Here we. Oh, wait. No, not so fast. This kind of move, and they all get shaken out. Those that hung on a little bit longer got shaken out right here, and that's what actually fueled the rest of the selling yesterday. We're probably going to see a similar move today. Now we've got a nice breakout here. Let's go to that daily chart. We are above the 100-day moving average. You can see the horizontal resistance line right here. You can see how we're currently above that resistance, and I'm going to put up the 100-day and 200-day moving averages so you can see where they come into play. Look, we're above the 100-day moving average. There's a chance that we might challenge that 200-day moving average. We're in striking distance. We could test it today, and that's at 299.47 on the SPY. So right now we're about 30 points out of the money, 20 points out of the money. So what's 20 points in the S&P these days? Nothing. Can we grind there throughout the course of the week? Yes, that's fairly likely that we're going to run up to that 200-day moving average and then take a pause heading into the Memorial weekend. We'll see what happens when we come back next Tuesday, but every single day that elapses gives analysts a chance to evaluate what consumers are doing and how quickly state economies are starting to reopen. And when you have a national holiday like this, well, that's an extra 3, 4, 5 days from right now when they can start to monitor consumers' patterns. So I see this as overall fairly bullish right now, but we still do not have a lot of clarity. The market is pricing in best case scenarios without question. So we'll see how everything plays out. I believe that right now the best situation for us is to sell out of the money bullish put spreads on strong stocks. That's what we've been doing while the market's been sideways here. Now, last week, a week ago Wednesday, here's what we were faced with. We had this double top right here. We had a big sell-off last Tuesday and follow through last Wednesday. So when I recorded my video, I felt that there was a good chance that we might stay within this trading range right here, with 295 being the high and a low probably coming in around the 272 level. So I published a swing trading video and I highlighted 2 bearish call spreads and 2 bullish put spreads. Well, one of the bearish call spreads was WYNN, and we were able to successfully leg out of that yesterday. So we bought back the short, and then we were able to sell the long call for the same price. So we were able to keep the credit that we initially received on that trade. But it's taking that type of adjustment right now. If you're neutral on the market, you've got to be ready to adjust if conditions change. And right now, I did not expect this big market rally on Monday, quite honestly. I mean, we had some softness last week. I thought that maybe throughout the course of the week, we'll just grind higher. That didn't happen. When we came in Monday morning, boom, the market was shot out of a cannon, and it held those gains very, very well. That was a sign, because we didn't come back and fill in this gap right here. That was a sign that buyers were still very much engaged and that the bid was strong. Saw a little bit of selling yesterday near the close. Boom, right back at it and through that 100-day moving average. So I also have one other bearish call spread on SHAK. Probably going to have to buy that back in. It's not in danger right now, but I don't want to be short out of the money bearish call spreads when the market is starting to move through major resistance levels. So when I do my video tonight, we're going to be focusing only on bullish put spreads, because technically that's what the market's telling me I need to do. So we'll go back into the 5-minute chart and see if we've got any clues on what might be happening right here, right now. Here's the problem. You get this nice little rally out of the gate this morning, big gap higher, okay? Well, we still don't know what's going to be happening in the first half hour of trading. I mean, we've got some mixed candles in here. We're going to reverse. We're going to get a dip. We're going to check that opening price right there. Are we going to fill in some of this gap? To this point, you really don't know 30 minutes into trading. And we inch our way higher, and this is kind of nice. We've got some long green candles closing on their high, but then we get this. Absolutely dead trading, dojis all over the place for a half an hour, nothing going. Get a tiny little pullback, tiny little rally. Here we go again. We're compressing, and now we're pulling back. Very, very light trading activity, very compressed price action, extremely difficult conditions to day trade. So those of you who are swing traders and that have been long, congratulations. That's exactly the type of trader that's happy in this environment, where you get this big gap up today and where the bid is holding. But as far as day trading goes, you have to be very, very careful. So I think right now you can take some bullish put spreads, sell some out of the money bullish put spreads, try and take advantage of time decay. I've told you that Friday's going to be super slow. Monday's a holiday. Tuesday we get what I call a holiday hangover. It's going to be a light trading day. So you've got 3 extra days taken out. That bodes well for premium sellers. So that's really what I would focus on doing. I'll see if I can find you a day trade. Right now we've got the 1OP indicator. Right here you can see that there's a bearish cross happening. So I'd be a little bit careful, especially with this upward sloping trend line being breached right here. Any kind of little pullback today is going to be welcome from a trading standpoint. And I hope that we at very least get back to this 297 level, because if we get a decent dip, then I'll be a buyer later in the day on the notion that the market will be able to run up and finish around that 100-day moving average. So without that pullback, it's going to be really, really tough, because we'll just continue to see a very tight compression. Most of the money that I've made trading, gosh, this year has come in the first few hours of the session. In the afternoons, I'm trimming my size in half, and I'm reducing my trade count because the price action is not nearly as good. And that's going to be the case today. I didn't make much money today. I nickeled and dimed probably about 7 or 8 trades and didn't have any losers, but didn't really make much money either. It's very much playing it safe. My best winners came on the short side. And I've got a short that I'm going to include here as well for day traders, so that you've got something to look at on both sides of the market. And let's take a look at what we've got. I've also got my pick of the day as far as a long position. And why don't we get right to that? It's AMAT. I really like this breakout right here through the 100-day moving average and the 200-day moving average. I think that support level is something that you can lean on. That's at about $55. So I think that you can sell a bullish put spread below the $55 strike price. You probably have to go out 3 weeks to get any decent kind of credit right now. But I think AMAT sets up really, really well. Let's go into some bullish searches and see what else we might be able to find. I'm going to go into Pop Bull. This is what I really like for swing trades. All I'm doing is I'm just scanning down to see any stock that might have some decent option liquidity. Twitter is one that I've seen today. You can see this horizontal breakout through resistance above this 100-day moving average. There's a possibility to be able to sell. You can see that comes into play at 30.76. There you might be able to sell a 30.50 put and maybe buy a $30 put, 50-cent wide bullish put spread. That looks pretty good. You've got this upward sloping trend line that you can also lean on. That comes into play right around the $30 level. Twitter looks good. VLO, I like that. You can see how the stock is getting through this horizontal resistance point, and it's through the 100-day moving average. So look, one little search, and we've already got 2 excellent candidates in Twitter and VLO. This is my favorite swing trading search, by the way. I'm going to continue to just scroll down. Rails, Canadian Pacific Rail, that has gone through this horizontal resistance level. It's filled in the gap. It's above 2 major moving averages. I like it. Rails in general have been super strong today. UNP right below it there. Same type of deal, getting through this horizontal resistance above the 200-day moving average. Rail stock's very strong. Here I think you can leverage that 160 strike price, and you can sell a bullish put spread below that 160 strike price using a 100-day moving average to key off of. Intel, another nice horizontal breakout. Big compression here, horizontal breakout, 100-day moving average here. You want to sell below that 100-day moving average. If you're super aggressive day trader, you can try and sell some premium right here at the 61.50 strike price, but you're pretty close to the money, so you've got to be pretty cautious, and you got to watch for any kind of market drop that we might have. So I do like it. I think the stock continues to move higher. So let's keep taking a look. We've already got a few nice ones. There's KSU. That's another rail stock. You can see how it's breaking through horizontal resistance. It's above the 100-day moving average. There's another nice one. So I'll give you a recap here because I'm finding a lot of really good stocks with just one search here. I'm not even going to do another one. So I'd probably find another dozen really good looking stocks. I'm just going to scan down through this. That's all you have to do. It's that easy. We've done all the heavy lifting for you. These searches tell you exactly where you need to look for opportunity. So I've got AMAT that I really like. I have Twitter that looks great. VLO looks good. INTC looks good. All the rail stocks look good. KSU, CP, UNP, CP, CSX, all of them are catching a nice bid today, and all of them are through resistance levels. So those would be your longs, and we want to make sure that we're selling bullish put spreads out of the money and that we're leaning on major technical support levels. So let's recap that one more time. So why are we doing that? What's the point of all of this? Well, if you take a look at these major support levels right here, these increase our probability of success because we know that there are natural buyers at those levels. So this would be an even better level because if you want to talk about security on this stock, you've got the 200-day moving average and you have major horizontal support 1, 2, 3, 4, 5, 6 times. That support level has been tested. So that comes into play around the $56 level on Intel, but we're 7 points out of the money with option implied volatilities contracting. You're not going to find any premium down there, so you're forced to go closer to the money, which is okay because we have some market momentum. We've got a market tailwind, so that's what pushes us up to that 100-day moving average. Sell the options very short term. I don't like to go out more than 2 weeks because I want to take advantage of that accelerated time premium decay. Plus, when these spreads expire worthless, I'm able to reevaluate market conditions every week, every 2 weeks. And that's what we need to do while we're waiting for that clarity. We're waiting to see how businesses respond to the reopening. We're waiting to see how many workers are rehired. We're waiting to see if consumers are ready to spend and if there's any pent-up demand. If the answer to all three of those questions is yes, the market will continue to grind higher. But I still think we need a few weeks to determine that. So we got to play it pretty cautiously. As those option premiums come in, the good news is that eventually, instead of a premium selling strategy, when the option premiums come in enough, we'll be able to shift to call buying strategies. Boy, I'd love to get a market pullback because then I definitely would be looking at doing that. You can see how the market's starting to come in, beautifully called by that 10P indicator. This is our governor. This tells us where we need to be positioned in the market. When you get these spikes and these bearish crosses, it tells you to be careful. Right here, we had the first cross right up in here. It said, be careful. That means start taking profits on your long positions. So if you heeded that warning, right now you're on the sidelines watching those stocks come in and perhaps setting up for another buying opportunity, which is what I'll be looking for. This indicator needs to drop way down, get a bullish cross, and then we'll have some nice buying opportunities. While we're waiting, let's go in and take a look at some bearish stock candidates. I've got a few of those for you as well. And if I go into heavy selling, really nice search. I'm going to go into HD. That was a short that I took earlier today and made money on. Look at that relative weakness. So you can see here we've got a nice downward sloping trend line. Click there, click there. There's our downward sloping trend line. You can draw the alert line when you take a short position. If the stock bounces, you're going to get a pop-up alert. If you don't get the pop-up alert, you just stay in the position. Let it keep drifting lower and drifting lower. I use these downward sloping alert lines in lieu of having a stop order. Well, why do you do that? Because if I have a trailing stop, I would have been stopped out of this trade on that long green bar. But if I draw this line, I'm not stopped out because I don't have a working order. I've just got an alert. Number one, the alert wasn't triggered. Number two, if it was, then I'd still be able to evaluate the stock and see if I want to be out of the position. So this to me is a much more effective manner of managing a trade than to have a stop order. So we're going to keep going down the list. TGT was another one that I made money on today. It was another nice looking short. Both of these have run up dramatically, and that's why they're making good short candidates. I shorted it early in here. You can see I was taking out the new low of the day, and it was weak relative to the market coming up on this search. Nice winner. Go into another search here, relative weakness. Take a look at, I would prefer to stick with stocks that are negative. So you see a couple, ENPH, Lilly. There you can see a downward sloping trend line, but volatility on this one, you got to wait for the bounce, wait for it to come up to that downward sloping trend line, then you've got a chance for a short. Click there. Click there. There's your downward sloping trend line, probably come in here. So on any kind of bounce, yes, I think you can short Lilly. Let's go to the daily chart. There you can see that there is horizontal support right in here, right where that gap is. So below 152, I would say Lilly becomes a more attractive short to me. Well, now that I've identified that, what do I do with that information? Well, I click GTC here, and I'm going to double click right on the tail of that candle. Now I have a GTC alert. Could be tomorrow, could be a week from now, could be a month from now. Excuse me, but I'm going to get an alert, and it's going to tell me that Lilly is through this horizontal support level, and then I may have an attractive put buying opportunity. That's how we do it. You have to use these alert lines. If you put the time in now, which only takes you an extra second or two, you're going to have trades delivered to you on a silver platter when these alerts start going off, because you know that that stock is going to be breaking key technical levels. So Lilly was a nice short today. And let's see what else we had here. VTIQ is in negative territory. That's a flyer. We can take a look at the 5-minute chart. May be difficult to borrow this stock, but you can see the relative weakness in here. And I had one other that I was looking at. Gosh, it's since ENPH was the other one. That was a high flyer yesterday. You can see that relative weakness here. It's been on this list for a while. Once it broke through horizontal support right there at the low of the day, beautiful entry point for a short. There's another stock that I've been shorting. Actually, I'm currently shorted. BBY. Oh yeah, very nice. I'm short that at 82.55, and I just hit my target profit. So I made 30 cents on that. I had an 82.25 bid for it. I posted that in the chat room, so I'm filled on that. Nice little winner. Take a look at the daily chart. And on the daily chart, BBY ran up huge. Big gap right here. Weakness. Now it's taking out the low, the open from that long gap higher. It's going to come in and fill in some of that gap. So I think that this works well for a nice day trade on the short side. I wouldn't be shorting stocks on a swing basis. Why the heck would you do that with the market above major resistance at 295, which is now support on the SPY, and with it challenging the 100-day moving average? Do not do any overnight bearish trades. There's no point to it. If you're doing overnights, you got to sell out of the money bullish put spreads. Gave you a bunch of stocks to take a look at. AMAT being my favorite. VLO, I think, also sets up really, really well. So those are the picks that you want to focus on today. So that's it for today's presentation. I'm going to very quickly take a look at the market, see what we've got going on right here. And you can see how it's just starting to come in little by little. Any dip that we get, just like this cross right in here, that's the type of dip that I'm looking for. We may not get anything to that magnitude, but anywhere around this minus 225 level where we start crossing back above and where we have the market coming in, I think that there'll be an opportunity later in the day to try and catch that drop and to buy some of these stocks that have fantastic relative strength and to look for a little bit of positive action heading into the close. There is one news item today, comes out 2 hours from right now. It's out at 2 o'clock p.m. Eastern Time. That is the FOMC minutes. Could drive the market a little bit, but what more can the Fed do? What more can the Fed say? They are as dovish as possible. And last week on 60 Minutes, Jerome Powell basically said, we got a lot more that we can do. We're just waiting to see if the current stimulus in QE is going to bear any fruit before we step up to the plate again. So that to me tells you everything that you need to know. Not looking for any new information on the FOMC minutes this afternoon, but the market, because it's pretty slow, may wait for that. Watch for support, try and buy that dip, and then see if you can get a nice little closing move higher. I think that's your best play of the day. Thank you. If you like this content, please give it a thumbs up. That way I know that I'm doing something right. Also, subscribe to the YouTube channel and turn on your notifications, because that's the way that you'll get alerts when a new video has been posted. And I promise you that I'll always have actionable trades in these videos along with lots of education. Thanks so much for watching. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.